Hey there, welcome back to my channel, it's me the Mind Injector. In this video we have some exciting news to share about SoFi technologies. It's been quite a turbulent time for banks lately, with several traditional institutions collapsing. But amidst all this, SoFi is emerging as a rising star in the banking landscape. Before we dive into this video guys, I've got some exciting news for you. I want to introduce you to Moomoo Financial. They are offering an incredible deal for a limited time only. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth between $3 and $2,000. But that's not all. If you make a net deposit of $100 or more during the promotion period, you'll receive not just one, but 5 free stocks worth up to $2,000, plus free premium courses to help you sharpen your investing skills. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So don't miss out on this amazing opportunity to level up your investing game. Sign up for a Moomoo brokerage account today using the link in the description and start earning those free stocks. Now, let's jump into the main content of this video. Anthony Noto, the CEO of SoFi, has a bold vision for the company. He wants to transform SoFi into the Amazon Web Services of banking. Now, you might be wondering what exactly that means. Well, stick around as we break down Noto's vision, what SoFi has been up to, and why it's so important. Unlike traditional banks like Wells Fargo or Bank of America, SoFi has taken a digital-first approach. They are all about encouraging their customers to download their app and explore a wide range of financial services. It may seem unusual at first, as banking has historically been associated with physical locations. But SoFi's tech-only strategy seems to be working. SoFi's roots and primary focus are in student lending. However, they also generate revenue from personal and home loans. They report their revenue in 2 categories: financial services and technology platform services. Financial services encompass personal finance offerings like savings account and credit cards, while technology platform services mainly refer to their acquisition of Galileo 3 years ago. The deal was aimed at combining Galileo's APIs with SoFi's mobile-first platform to cater to both commercial clients and consumers. During the recent earnings call, Noto acknowledged that student loan refinancing has been impacted due to uncertainties around the end of moratoria and federal student loan payments. Additionally, home loans are facing challenges with rising rates, as SoFi continues to integrate Wyndham Capital Mortgage, which they acquired at the beginning of second quarter 2023. SoFi's core lending segments are going through a rough patch, but there's more to the story. While student loan origination volume was down 47% year-over-year, and home loan origination volume was down 71% year-over-year, total origination volume still saw a 7% year-over-year increase. This growth was primarily driven by a record-breaking $3 billion in personal loan origination volume, marking a 46% year-over-year increase. But that's not all. SoFi has seen significant growth in its technology platform revenue, which increased by 28% year-over-year to $79 million. Financial services revenue saw an astounding 244% year-over-year increase, reaching $81 million. Combining these 2 business units with the lending segment, SoFi achieved an impressive 43% year-over-year growth rate in total revenue for first quarter. Now, let's talk about profitability. SoFi reported total revenue of $472 million for the quarter. while total expenses amounted to $508 million, representing a 16% year-over-year growth. However, the good news is that SoFi's revenue grew at a rate nearly 3 times higher than its expenses. This resulted in a net loss of $34 million for first quarter 2023, a significant improvement compared to the net loss of $110 million in first quarter 2022. When it comes to valuation metrics, we can't rely on price-to-earnings ratio since SoFi isn't yet profitable. However, the trailing 12 months price-to-sales ratio is quite interesting. Currently, SoFi is trading at around 3 times price-to-sales, whereas it was around 4.4 times price-to-sales at the same time last year. Now, this creates an intriguing situation. SoFi is experiencing over 40% year-over-year growth in its top line, significantly narrowing its net losses, and all this amidst a challenging interest rate environment. Yet, the stock's valuation is lower than it was a year ago. This might be one of the reasons why Noto keeps buying the company's shares. It's important to note that insider buying is generally a positive sign, but it should not be the sole reason for investing in a stock. The bull case for SoFi is quite compelling. They are becoming a clear market leader in digital-first banking, and we need to consider that the current macro challenges in the lending market will subside eventually. SoFi's differentiated product suite and strong growth profile make it an enticing opportunity for long-term investors. One could argue that SoFi is currently oversold, and the potential for future growth in lending and other products might not be fully reflected in the current stock price. Therefore, now could be a great opportunity to consider building a position in SoFi. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.